Going on? You know who it is, your favorite professor. It's Mr. Barella, aka Mr. I get into fights with my iron, so that's why my shirt's always wrinkly. And today I want to present you a pretty interesting video: how to get rich as a teacher in the NYC DOE. And most of you might be thinking, what? Teachers don't get rich. Flat out, it's impossible. Teachers are only here because we do it for, we could help students grow, we change people's lives. We all remember that one teacher, but that doesn't mean it can't financially be advantage to you. So I'm going to explain today how, and my cohort is really benefiting from this, how people in the DOE, if you have at least 30 years, can become extremely, extremely rich and leave this legacy for the rest of your family for, I want to say, at least the rest of their lifetime. Okay? Now, it starts off with time and money. So, what does this mean? A lot of people are looking to get rich quick. And I'm going to give you an example. If I offer a kid a cookie right now, and then I tell the kid, all right, if I don't give you a cookie right now, but you wait tomorrow, I'll give you 3 cookies. Which one do you want to take? Well, the obvious answer is wait the day, but so many people will say, you know what, screw it, let me just take the cookie now. And this is the mindset you have to change. Becoming rich is a mindset. It's not about, how do I use Shopify the best? How do I sell on Instagram? Listen, this is the business we chose, and I'm here to show you how to make the most out of it. So the first thing I want you guys to do as a teacher is move up in salary. So moving up in salary, there's 2 ways as a teacher, and I'm going to link the UFT teacher salary schedule in the video. The first is time. So every year that you work in the DOE, your salary goes up to 8 years. Then for every 5 years of longevity, it increases again, right? So just by working in the system, your salary goes up. But there's another way you can increase it, and that's through education. So you can get a job in the DOE if you're certified with a bachelor's, right? But it's actually mandatory in the first 5 years with a little bit of extension that you get a master's. But the greatest part is, with the master's, you get a salary jump. If you have a master's plus 30, which means after your first bachelor's degree, or if you're getting a second master's, and any excess credit after your first master's or from your bachelor's that not included in that degree, you get an additional raise. Well, let's say you become a doctor, right? You have a doctor in education, you have some kind of PD, a professional doctorate or professional degree, you're going to reach the maximum salary in your field, right? So one way is you can't really ask for a raise in teaching. You can only earn the raise through time or going back to school and investing some money. So this money is going to pay back by itself. And for the New York City Teaching Fellows, the master's part is already done. Some of you already have 2 degrees, some of you have 3. You already fall in this category, you're doing perfect. The next part, and this doesn't just apply to teachers, this applies to anybody who's working in for city or has an employer match benefit, and that is our TRS. So our TRS is the Teacher Retirement System, which falls under the 403B for investments account. And the 403B allows us to contribute a maximum of $19,000 a year. Now this is pre-tax, which means when you contribute this $19,000 a year, it lowers your salary, right? So this is the money and time component. It's going to lower your salary, which means lower money you receive, the lower income tax you pay. So this money, you're paying yourself. And the first rule to getting rich is you must pay yourself. You can't live paycheck to paycheck. And one way to ensure this is paying yourself. So what do I mean TRS gets you rich? Well, there's 2 ways to invest. There's other options. You're not going to do that because you're smarter than that. You either invest in the fixed 7% or you invest in the market. So what's the difference? Fix 7% after 30 years if you contribute $19,000. And remember, this goes up every year. Will land you $1.9 million in 30 years. Whoa, wait, what? That's right. Investing $19,000, and this is money you don't even see. They just take out of your account, gets you $1.9 million. But what if you leave it in the market? So the market's a little funny because they average 8 to 10% return. So I went on the extreme end and said 10% because the market is killing it. But remember, the market goes up and down. If you were to leave all your money in the market, same amount, 10% return, that's $3.4 million. And here's the part I want to use. So I'm going to use my phone. There is a law of return. So with 7% and 10%, you're always going to only withdraw 4% of the total income. So what does that mean? If you withdraw only 4%, right? So 4% of 3.4 million. Remember, and 3.4 million is growing every year because of compound interest, guys. That gives you, so I'm going to say times 0.4. You're living, I'm not even talking about your TRS, your pension, your Social Security. Right there, you're taking home $136,000 a year if you only withdraw 4% of this. Having money makes you rich. This is why the rich get rich, right? The third one, and this one is very important if you live in New York because I constantly say this. Real estate, real estate, real estate. Stop renting, buy property. Stop renting, buy property. And I had a discussion with a student the other day. Well, why would you buy a house? You have to fix it sometimes. You know, it costs more than renting. All right, let me tell you something. When you own a house, it's yours. And not only that, it's a business now. You get refunds on your taxes. You get tax breaks, guys. And you can rent a part of your house that could cover most of it. And your value, the mortgage of your house, if you put fixed 30 years, will not go up. If you rent, not only does renting not benefit you, you're paying someone else's bills, right? You're throwing money in the trash because none of it gets back because you can't sell something you're renting and your rent goes up. So I want you, when you've been investing your money in your TRS account or you could put money aside, I want you to use that money to buy a house, right? I want you to buy a house. What you're going to do when you buy the house, you're going to invest it. That money becomes investment. So what does that mean? Okay, let me give you an example. You buy this house in a bad neighborhood or mediocre neighborhood or even decent neighborhood in New York. Let's say you have to pay $400,000 for that, right? And remember, neighborhoods change. This is the crazy part. You think you might be buying into a somewhat average neighborhood? Neighborhoods evolve. You buy it, it's going to charge you, after interest from the bank, it's going to cost you $750,000, $800,000, right? Guess what? In 20 years, 30 years, what is $1? Remember in 2000, we used to go to Mr. Softy. We used to buy ice cream for $1. Now Mr. Softy is costing us $2, $3. The value will increase and your house went up. There's your money. Invest in a house, right? Because tax benefits, you could resell the house, fixed prices, and you could rent. That's the best part. The house will pay for itself if you're devoted. Next thing is, and you hear this from Gary, you hear from a lot of people, side hustle. As a teacher, what's a side hustle? You're going to do a lot of procession, guys, meaning you're going to do coverage. You're going to sign, you got to work. You got to work, guys. When you're young, you got to work. Do your procession. Do side tutoring, right? You can charge $40, $50 an hour, and that's off the book. I'm not saying you should. Remember, disclaimer, I am not a tax professional, but you should do some tutoring. Last is maybe become a real estate agent. Maybe become a car salesman. You have to find something that you can do on the side outside of teaching while you're young. You want, because you remember, you're taking a big hit. You're contributing almost $20,000 a year for future returns. So you have to find a way to supplement it. Me, I use gambling, horse racing. You know what I'm saying? I don't condone it, but it's a side income that I've been successful at it so far. The last thing is, remember, these you can't really touch because you're going to get taxed. You want to have separate investment accounts. Now, those separate investment accounts include the Roth IRA. You can contribute this year up to $6,000, and it's just like this. So now you might have two accounts, but I might be happy with this. If you're married, you have kids, it's going to be difficult. All of this is going to be difficult. But I'm being realistic. If you want to be frugal, how can you get rich in New York? You're going to put a Roth IRA on top of this. Remember, if you're not a teacher, they might call this the 401, right? It's a employer match system, which is it might even be better. And you're going to take your money. You have to save money, guys. I remember when I first started working, if I got paid Thursday, I was broke Friday. You have to be disciplined. And, this is the best. You have to be disciplined. I want you guys to take money out, whatever you have. Remember, you're paying yourself first. Whatever your bills, this, that, whatever you have left over, try your best to live below your means. And below your means has to be like strict. I want 25% of your money in bonds. I want 75% of your money in stocks. And when I mean stocks, I don't know the stock market game that much. I don't know anything about Bitcoin. But what I do know is that the S&P 500 is the top 500 companies that'll guarantee you a return. So when you take and invest in stocks or ETFs, you want to look at maybe Vanguard companies, maybe Chase, maybe Ally, maybe Fidelity. Any account that offers an S&P 500. An S&P 500 right now might be on a tear. I think I heard some YouTube couple talking about 28% return. That's insane. Okay? So what is this? Just to recap, increase your salary with time, invest money to increase your degrees. Contribute all your money into the TRS while you're young. Right? You might have to cut it back. That means this number goes down, but still you'll hit the $1 million mark. Buy a house. Stop renting. Stop this nonsense. Put the money where it belongs because your kids will really benefit. I ran into a guy. His parents bought a house or a condo, something like that in Brooklyn, $30,000. Sold it for 1.5. Guys, you can't. Owning is better than renting, flat out. Side hustle. Remember, you need that side hustle, guys, and that side hustle will really fill that void. You have kids, you have this, you have bills, but you got to make sure your investments come first. And that's the sad truth. Investments come first. And last but not least, the investments that you can touch and you can physically contribute post-tax, which is your Roth IRA, 25% in bonds. So bonds protects you from the stock market, and your stocks, S&P 500, will grow, or you can put dividends. It's up to you guys. But this is Mr. Brella signing out. I hope you guys enjoy. I know it's been a long time since I made a YouTube video, and this is just more on the financial side. I just wanted to try something out. This was how to get rich as a teacher in the NYC DOE. Peace out.